We've had a very strong 6 months. We've delivered 7.1% NAV growth in US dollars. That's equivalent to 15.5% growth in sterling. So a very strong result, partly driven by the currency there in sterling. So that's driven a particularly strong gain in the share price in the 6 months of more than 20% in the sterling measure. So shareholders have had a very strong run. We're very pleased with the performance we're continuing to deliver. If you measure the performance over the 10-year horizon, we're now comfortably above 12% annualized growth in US dollars. Looking back to inception in December 2007, measuring from there against the FTSE All World Total Return, we've outperformed that index by 3.6 percentage points per annum, which is clearly very strong over such a long time frame, and that is an improvement on the 6 months previously. So we're kind of seeing an incremental gain in that outperformance measure. We made new commitments of $315 million in the 6-month period. Those commitments were made across multiple different funds, across primary, secondary and direct strategies, so a very broad spread of new exposures being secured. Those commitments have supported continued investment, actually a similar level to the previous 6-month period in the previous financial year. But we've seen net investment in the period of $63 million. We've seen kind of limited distribution value in terms of cash coming back into the fund. It's only similar to last year despite the larger NAV. But what we have seen is a very strong uplift in the valuations. As longer term investors may know, we've been measuring this for some time, back since 2012. And the average premium now that we've achieved on realizations has risen to 43%. This 6-month period, we generated a 68% uplift. So of the realizations in the 6-month period, the value that we've achieved is 68% higher than the value immediately prior to those transactions. This has been driven by some particularly strong IPOs amongst the venture companies in the portfolio. Many investors will be aware it's been a strong market. We've benefited from that as we've been flagging for several years now. The portfolio does generate these kind of opportunities, and when our underlying managers feel that there is a strong environment, they can really drive those exits and deliver those kind of premiums. The realizations came from a broad base of vintage years, and I think it's important to stress our portfolio is very well diversified across vintage. So the fact that we've been active and investing since the IPO in 2007, also the fact we have extensive secondary exposure, means that the vintage diversification in the fund is very broad-based. So the majority of the distribution flow came from kind of 2011 to 2018 vintages. So that is the kind of breadth that we have. Total expenses in 6 months amounted to 1.38% of NAV. That was a little higher than the previous 6-month period, driven really by, ironically, the strong performance in the portfolio that has generated additional carried interest allocation. So that's really an example of the variable costs coming through when performance is strong. We've had 2 board changes in the period. Ed Warner has joined as of July 2019. He is expected to transition into the chairman role when Michael steps down in July 2020. Carolina Espinal also joined the board in July. She replaces Brooke Zug as one of the 2 Harbourvest representatives on the board.